Hey everybody, Will Fix here. I hope you had a Merry Christmas. Listen, today's video, I want to pull together a few ideas. I want to show you what I consider experts are saying about the U.S. economy. Johnny Bravo's channel and Stephen Van Meter are two people that I listen to when it comes to, you know, the United States markets. And we know we've seen the stock market go up, and everything that I'm saying is going to be related to XRP. And I also want to show a little video, a little chunk of a video that I highly recommend, this particular video and this guy's channel. And it's Lewis Jackson. His channel's fantastic. He does a great job. And he did an interview several months ago with Zach Rector, and they were, and I love Zach's channel, love Zach. And they were speaking about XRP as a world reserve currency. And there's some good key points in there. And I put myself in there as well. So, because some of the points they're making, I love to draw clarity and to paint a picture, because sometimes the length of a conversation can create a situation where it's hard to get the continuity together to have just a block of understanding, you know. Because it can have such a long, you know, explanation, I suppose. But I think the value of my particular channel sometimes is to be able to concisely maybe explain things, and so I try to add that value. And you know, there's nothing new under the sun, and most of us get our information. Most all channels are gathering information from multiple sources and then bringing it all together in our own way. And so that's what I'll be doing on this video. So, hey, if you like this kind of content, XRP, then hit a thumbs up for me. Please subscribe, hit the bell for me. The subscriptions are awesome. You guys have responded well. Check out my links in the description. Let's get into the video. I want to show a piece of Lewis Jackson's video with Rector, and that's going to be following an establishment of, we have probably some major economic crisis coming, established by Johnny Bravo and Stephen Van Meter. So let's look at those first.
Insolvent. I'm your host, Steve Van Meter, and thanks for joining me today. In our lead story today, U.S. banks are panicking as the next financial crisis is about to start. And you're not going to believe what happened and why it's having such a major impact on the small banks, because we just found out about 300 of them are teetering on the edge of insolvency. Now let's head over to the conference board where we picked today's story up as we start out looking at what's going on in the U.S. economy, which is real important here because this all backfeeds right into the banks and why their survival in the near-term future is all but a certainty that many of them are not. And as we look to the conference board, what we see is the LEI, or leading economic index for the U.S., fell yet again in November. But there's hope in the report because they say the U.S. LEI continued declining in November. Meanwhile, stock prices making virtually the only positive contribution to the index in the month. Of course, we'll talk about why that is toward the end of the show, as housing and labor market indicators weakened in November, reflecting warning areas for the economy. The leading credit index and manufacturing new orders were essentially unchanged, even though we're starting to see signs from the regional Fed that what they're saying is the manufacturing sector is further declining, which is all pointing to a lack of economic growth. But as a result of all of this, the conference board still forecasts a short and shallow recession in the first half of 2024. And from the bank's perspective, that would be a huge blessing. But as you're about to see, what's going on with the banks is actually going to be the catalyst for the next U.S. financial crisis. So let's dig deeper into the LEI. And why the conference board's so excited is because they're seeing the data start to rebound here, suggesting to them, as their signal leads the U.S. economy by 6 months, that perhaps a soft landing is baked into the cake. And maybe the reason we're actually seeing the Federal Reserve look to perhaps cut rates next year is because they think they've now done enough. This would be supportive of, again, the mythical soft landing. That is until the LEI turns down for a second time. As the euphoria on Fed pivot prospects ignore the lagging hangover, and the impact of past hikes is still feeding through the real economy because there's this thing called the monetary lags. Now, if you ask the Federal Reserve, they will tell you they're long and variable. If you ask them what that means, they'll just tell you. They're long and variable. They don't know how long, and they don't know how variable. What they do know is when everything starts to kick in, and that happens. We'll show you what is really going on and what the Fed does. When this all starts to kick in, well, there's nothing they can stop the next financial crisis.
Almost there. Also, how about that inverted yield curve that's only, we're at 13. One more month, kids. LA Unified Math, that would be 14. Look at this thing. Wowzer. This curve has been inverted for 14 months. And again, LA Unified Math, that's more than a year. And now on to other things that is going to be proof that we're either in a recession or we are going to go through a gnarly one. U.S. activity set to slump. Leading economic index shows. The Conference Board, that was in October. Actually, the Conference Board index fell more steeply than economists and strategists and analysts expected in September and January, February, March. This thing has been in the toilets for over a year. And what do you think November is? Same one. How about December? You got it. For some reason, retail just keeps like, oh, it's that. Economy, U.S. leading indicators, LEI, for the U.S. fell again in November and in December and in January, but let's go all in on NVIDIA. $100,000 as UK recession after economy shrinks. Guys, it started in China, okay, and they're lying, just like North Korea's unemployment, I think, is at 2%. Great GDP, too. It's all coming this way. See, they make the stuff, we buy the stuff. They're like, no one's making it, no one's asking for us to make it. We're going down. And the only way to fix this thing is lock us all down. Give us 10 trillion and then problem solved. Can is kicked.
Now, if you haven't seen Lewis Jackson's channel, it's fantastic. If you see it in any of his videos, you'll see multiple shirts that he wears because he probably takes like a week to do and builds videos over time. He does a fantastic job. But this is just a couple minutes long. It's really worth your viewing, so check this out.
Pretty simple.
I think when people say you can't back a token or something, certainly you can. I mean, there's multiple papers. I mean, you can go to XRPL.org and read a whole blog post on tokenizing assets. So it absolutely can be done. I think maybe the dispute comes a little around almost arguing from two sides of the coin. Maybe they're saying you can't take a physical asset and put that on a blockchain, which is yes. Okay, that makes sense. The other side of the coin is that you take all of the indicia of ownership, all of the rights associated with owning the physical asset, and put that on the token. You know, embody that, mint that as a token, and then holding that token becomes the same as effectively having all of the rights associated with the physical asset. That's where we believe the whole world is headed, that there will be a digital representation of all physical assets, you know, in the future. And that's part of a lot of the work that's being done now by developers and project entrepreneurs. We've had numerous conversations with a bunch of different entrepreneurs and businesses, some who are already tokenizing gold, others who are, you know, tokenizing other commodity assets. So absolutely the way of the future.
So if it's so easy to work around that issue, it opens up the question of how do you even define backing anyway?
It's a technical nuance to say that gold is not going to back XRP, because XRP is going to be backed by all of the value that is put on this ledger and settled on this ledger. That's going to be gold, it's going to be silver, and I believe that you're going to see almost every commodity tokenized and put on the XRP ledger, along with real estate. I think that we're ready to handle some derivatives. We're ready to, obviously they're moving fast forward ahead with cross-border payments is what, the public test that's being seen by everyone, right? But I believe that you're going to see tokenized stocks, bonds, commodities, everything on the XRP ledger and others. And I want to reiterate, many people know where I stand as, very big fan of XRP. Other ledgers are going to get pieces of this action as well.
Let's reimagine a system where the US dollar is dethroned as the world reserve currency. This process is called de-dollarization, and there's been plenty of research, like I've covered in previous videos, about how the BRICS nations are actually going through the process of de-dollarizing. Something needs to go in that top position. Something needs to be world reserve currency.
But I think that we need to start looking at XRP as the standard, as the currency. And it's a key thing that differentiates XRP from the rest of the space is the true nature of XRP being a currency. It's not just a tech. We're investing in software, we're investing in tech, but XRP being that native currency and Ripple working on their goal of making it a world reserve currency is much different than the rest of the space. And I would argue that many quote unquote cryptocurrencies have not actually created that strong of a currency. They have a token. And so once again, yeah, I think that you're right. I think that people saying that value getting tokenized on the XRP ledger isn't going to affect the XRP's value, the XRP price, I think that that's mistaken. Well, think about this. The SDR right now is backed by 5 currencies. XRP is going to be backed by every currency and every commodity and every form of value on the planet. So in my opinion, it's already equivalent to an SDR.
Now I agree that XRP it'll be backed by the value of what's on the XRP ledger. And really what that is think of it as backed by being confidence, consumer confidence. The confidence is going to be behind the XRP ledger because there's going to be so many assets on the ledger. Digitized gold, digitized silver, digitized property. There'll be so many things on it that forms a sense of confidence for the consumer. And I agree, it's also going to become a store of value because it's going to be dependable, because there's going to be trades, there's going to be money passed back and forth. And that's how the consensus of something being backed, I believe, where the importance of what's backed. It's not a technical backing necessarily, like we have a house, a big safe over here full of gold, and now XRP is all backed by all of this gold over here. I don't think that's how this is going to work. I believe how it's going to work is exactly what they're talking about, is it's going to be the consumer confidence on XRP. So now, to relate this to the earlier videos where I'm showing that there's a big consensus that we're going to see a severe shock in the marketplace. I believe the stock market's at a top, and we're probably going to see that correct. There is also trillions of dollars coming due in the bond market in the first quarter, and some of that's in the second quarter as well. And the government's going to have to do something about that. I believe that's going to be devastating to the marketplace. We have so many indicators saying, man, stuff is happening. The first 2 quarters of this year might be very devastating in some markets. Now, when money is trying to find a place to grow, if the stock market isn't the place and people pull out there, a lot of times you see the stock market and the bond market work in a relative fashion to each other, but people are trying to find a place to put their money. Now, if all this devastation shows up and we're having a possible bull market in crypto, now I believe at first crypto is going to suffer like anything else. So right away we have stock market crash, we have all kinds of stuff happening, gold, silver, everything's going to be affected, I believe, momentarily. But then when people start finding a place to put money, if that becomes that people decide crypto is where the money needs to go, then we're going to see an inverse correlation to what's going on in the markets to what's going on in crypto. I believe we will see gold, silver, and crypto rise. I think we'll see it rise, possibly shockingly, in the first 2 quarters. And it could be in advance of it. It could be right in the middle of it, and it could be behind all the devastation. It can happen so many different ways. But I wanted to bring you those few points and show you those few things to get to that conclusion that I just had. Let's watch the next couple months and protect everything that we have. And it's going to be hard to hang on when if we see it drop hard, you know, with everything else that's going on. That's going to be kind of difficult, you know, because we're going to see ourselves get upset. But it could be that doesn't happen and we just see a sharp rise. But just hang on. Let's see what happens. Hope you enjoyed today's video. Like and subscribe. Check out my links. Have a good day.